And Mike, there are a few other factoids in there that caught my eye, with processed goods that are up 24% year over year, unprocessed goods as well up 32%. Is that showing us that we're not close to slowing down anytime soon?
Well, it does suggest that inflation is broadening. Now, a lot of people on Wall Street and at the Fed think that we're very close to a peak, and we have seen some commodity prices go down. You guys were talking about oil prices just a short time ago. The question is, do they continue? And that's the Fed's dilemma tomorrow, is they know that inflation is a problem, and they also know that Omicron is out there, and we don't know what's going to happen with the economy. So they have to make a risk management judgment, which probably means, as you can see on the screen, they're going to go $30 billion a month in tapering, which will give them the option then to raise interest rates. But we also want to see what their inflation forecast is, and then the dot plot to see how they figure that affects the possibility of rate increases.
And there's also a lot of talk, of course, how it sort of dovetails with the other side of the mandate, of course, the employment side of it here. And Powell has seemed to suggest that we're on our way to whatever that measure of full employment is here. Is there some sense here that the inflation narrative might be a little bit too strong for them to ignore and waiting for that full employment to reach full?
Well, that's why they would like to delay the idea of rate increases, because if they are tapering, they're still adding some stimulus to the economy. And their hope is they can continue to push the unemployment rate down, particularly for minorities. We have seen the overall unemployment rate come down to 4.2%, which is not far from the 3.6 we had right before the pandemic. But black unemployment was 5% before the pandemic, and it's over 6% now. They'd like to make more progress on that.
How much do you trust that number when you hear that 4.2%? Because you hear so much about some of the distortions with people who've left the labor force and some people who are kind of straddling the line between being in and out.
That's another problem for the Fed to figure out, is how many people are actually going to come back into the labor force. Because if we have a lot of people come back into the labor force, then that unemployment rate could go up as people look for jobs. There are an awful lot of jobs out there, according to the JOLTS survey. So in theory, we could absorb them, but again, it's something the Fed doesn't know at this point.
Mike, I want to point to a column from our Cameron Kreis that he put out on Bloomberg today, and he said the real issue for markets isn't whether the Fed does hike 5 hikes or 6 through the end of 2023, but what happens after the rate hits 1.5%. How closely watched is the dot plot going to be tomorrow, looking beyond just liftoff, but what that path of steepening and rate hikes is actually going to look like?
Well, it's going to be interesting because the Fed keeps putting out the dot plot, and Wall Street keeps taking it as a forecast rather than 17 individual views on what rates might be. And so it will get a lot of attention, especially if it...
Can we all agree this is absolutely the worst chart on
the green line is market expectations. That's what the market thinks rates will be. And you can see the 1.5%. Why?
You drew that line.
Yeah, with my Crayola.
Right, okay. Just to be clear.
The market thinks that they'll get to 1.5 and have to stop. And that's why Cameron was writing the way he was. The Fed's view is they'll go to 2.5. Yeah. They might even raise that to get to a neutral rate.
I thought Powell was going to get rid of the dot plot.
They talked about it, but they decided it was somehow still useful.
Okay.